Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I'm David Robson, and today's episode is called An Audit is Scary, but Your Tax Return is Terrifying. If the IRS feels like a monster under the bed, here's the twist. Most people scare themselves into overpaying. They skip deductions, avoid credits, and leave refunds hiding in plain sight. Our mission today is to conquer audit anxiety so you can confidently claim every dollar you're entitled to. No shady loopholes, just smart planning, clean documentation, and a calm plan if the IRS ever knocks. Take a breath, grab your receipts, and let's turn fear into strategy. Let's start with the fear factor. I routinely meet taxpayers who confess, I didn't claim my home office, or I left off mileage, because they worried it looks bad. That self-censorship is a voluntary tax increase. The audit defense isn't avoidance, it's evidence. If you can prove it and it's allowed, claim it. Imagine turning down your paycheck because you don't want payroll to notice you work there. Silly, right? Same idea with deductions and credits. The code gives rules so you can reduce tax legally. Your job is to follow the rules, keep proof, and stop arguing against yourself today. Quick reality check. An audit is simply the IRS asking you to substantiate positions. Most contacts aren't dramatic field exams, they're letters. There are 3 flavors. Notices flag mismatches or math issues. Correspondence audits request documents by mail or upload. Field exams happen in person or virtually and focus on complex returns. For the vast majority of taxpayers, audit rates are low, often well under 1% in any given year. Low probability isn't zero, so we plan as if someday we'll explain our numbers. Good news, organized, consistent records usually end the conversation quickly and favorably for both sides. So, what actually draws scrutiny? Matching mismatches, your W-2s, 1099s, and brokerage statements must tie to your return. Repeatedly, unprofitable Schedule C activity invites hobby loss questions. Very large charitable deductions relative to income demand strong substantiation. Round number entries suggest estimates instead of records. Cash-intensive businesses like restaurants, salons, convenience stores see more attention. Big year-to-year swings without explanation raise eyebrows too. Also watch basis reporting on investments and real estate. Form 8300 cash reporting and payroll filings that don't reconcile with W-2 totals. None of these are automatic audits. They're patterns that may prompt questions. Clean, consistent documentation reduces the drama considerably. Let's bust a few myths. Home office is not a red flag when you have exclusive and regular use, square footage calculations, and reasonable expense allocation. Mileage is fine with a contemporaneous log and start-stop locations. Claiming credits you qualify for, AOTC, child tax credit, saver's credit, doesn't summon auditors. Large refunds don't trigger audits. They usually signal over-withholding. E-filing actually reduces math errors. What does cause trouble? Inconsistent facts and weak documentation. If your story and your receipts align, you're good. If they don't, you're not. Keep the facts straight and stop letting myths talk you out of legal savings today. Documentation wins audits. Aim for the 5 W's on receipts. Who, what, when, where, why. For meals, note the business purpose and attendees. For mileage, track date, origin, destination, purpose, and miles. Apps help. For travel, keep itineraries, invoices, and proof of payment. Home office. Measure square footage, document exclusive and regular use. Keep photos or layout, and retain utility, rent, and internet bills. Digital record keeping is fine. Scan and back up securely. Retention. Generally keep tax records at least 3 years after filing. Basis and property records until sold. Keep 6 years if there's potential substantial understatement in certain cases. Lean on safe harbors. The de minimis capitalization rule lets many businesses expense tangible items costing $2,500 or less per invoice or item with a written policy. Standard mileage can beat actual vehicle expenses. Run both methods annually. Per diem rates simplify travel meals and incidentals. Accountable plans allow employers, including S-Corps, to reimburse employees tax-free with receipts. Meals are generally 50% deductible. Know the material participation tests to avoid passive loss limits. If there's no profit motive, hobby loss rules deny deductions beyond income. Clear, bright lines make defensible decisions and reduce gray area debates you don't need at all. Here's how matching works. Employers and payers send W-2s, 1099s, and brokerage reports to the IRS and to you. Computers compare those to your return. If something's missing or mistyped, you may receive a CP2000 notice proposing additional tax. Prevent this by reconciling every form, entering totals exactly, and reporting basis on securities sales. Wait for corrected forms before filing. If you trade frequently, import transaction files rather than manual entry. For small interest or dividends, don't ignore them. Include them. If you get a CP2000, respond on time with documentation or agreement and request abatement of penalties when appropriate. Let's capture easy wins. Health savings account contributions are triple tax advantaged when paired with HSA-eligible insurance. IRA and spousal IRA contributions may be deductible. Roth IRAs build tax-free growth. Max 401k deferrals if cash flow allows, and check catch-ups. The Savers Credit rewards lower to moderate incomes who contribute. Education credits, AOTC and lifetime learning, reduce tax dollar for dollar when eligibility is met. Don't overlook child tax and dependent care credits. Consider charitable bunching using a donor-advised fund, and check state benefits on 529 plan contributions, even for near-term tuition or expenses. For small businesses, opportunity abounds. Section 199A may provide a qualified business income deduction up to 20% of eligible profit, subject to wages, property, and specified service limits. Section 179 and bonus depreciation can accelerate write-offs for equipment and certain improvements. Deduct startup and organizational costs when launching. Understand business meals and travel substantiation. Allocate home office, internet, and phone between business and personal use reasonably. Self-employed health insurance is an above-the-line deduction. Use an accountable plan to reimburse expenses. For S-Corp, plan reasonable compensation annually to balance payroll taxes and QBI. Document everything and revisit elections each year thoughtfully. Real estate requires precision. Depreciate buildings, not land, and track improvements separately. Passive activity rules generally limit losses unless you meet exceptions. Real estate professionals who materially participate may deduct losses against other income. Short-term rentals averaging 7 days or less can qualify as non-passive with material participation, even without real estate professional status. Consider cost segregation on larger properties to accelerate depreciation, paired with an engineering-based report to withstand scrutiny. Keep lease agreements, settlement statements, depreciation schedules, and repair versus improvement analyses. Reconcile 1099s from platforms and property managers. Consistency across returns, books, and loan applications is your credibility everywhere. Investing creates paper trails. Brokerages issue consolidated 1099s for dividends, interest, and sales. Report proceeds and cost basis accurately. Track wash sales, which defer losses when you repurchase substantially identical securities within 30 days. Crypto adds complexity. Some exchanges issue 1099s for rewards or payments, but your responsibility is complete reporting. Keep detailed records of buys, sells, swaps, mining, staking, and fees. Basis tracking software helps. Don't ignore small transactions. The IRS sees them. If basis is missing, brokers may report zero, generating inflated gains unless you supply data. Reconcile totals to your return and keep exportable backups for safety. Should you amend or simply adjust going forward? Amend when the error is material, affects your current or future filings, or you're due a refund. Minor timing differences can be fixed prospectively with better processes. Deadlines matter. Generally, you have 3 years from the original filing date, or 2 years from when you paid the tax, whichever is later, to claim a refund. The IRS usually has 3 years to assess additional tax, extended to 6 when there's a substantial omission of income. Keep proof of mailing or e-filing acceptance. When in doubt, quantify the dollar impact to guide the decision carefully. If the IRS contacts you, breathe. Read the notice carefully, note deadlines, and identify exactly what's requested. Respond only to the issues raised and avoid volunteering extra tangents. Provide organized copies, not originals. Include a simple cover letter that tells a clear story tying documents to return lines. If you need time, request an extension before the due date. You have representation rights. Form 2848 allows a practitioner to communicate on your behalf. For in-person or virtual exams, set ground rules. Keep a log of requests and maintain a professional tone. Calm, complete, concise responses resolve most matters in my experience. Let's land the plane. Year-round, keep monthly books, reconcile accounts, and file receipts digitally. Quarterly, review profit, adjust estimates, and refresh mileage logs. Before year-end, schedule a planning session to lock in deductions, fund HSAs, optimize retirement, time equipment purchases, harvest gains or losses, and confirm payroll and 1099s. Today we demystified audits, debunked red flags, and mapped documentation, safe harbors, and opportunities for individuals, businesses, rentals, and investors. Bottom line, proactive planning plus clean records lets you keep every dollar you're entitled to without inviting trouble. I'm David Robson. Thanks for listening to Tax Smarts Unlocked, where confidence beats fear daily.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.